Welcome back to the LPR Trading Group YouTube channel. It's Dave again. I've got another video for you guys today. Now, we're going to start with the footprint chart today. And what I want to show you guys is how your order flow can give you an idea or tip you off to where you're going to enter on an ICT type PD array before it even shows up. Okay, so what I've got is I've got Friday's trading session here inside of our Renko 10T chart. And I'm going to flip back and forth between that chart and this chart right here. We'll also go to the 5-minute chart because this is where the setup's going to happen. But I want to talk you through this Renko chart and the footprint chart and how we can see where we can possibly get an ICT entry off of a PD array on an order flow chart before it shows up on a candlestick chart. So I'm going to play this here. And what we're going to do is we're going to start with this chart. Now this is the Renko 10-tick chart, just like I said. This is Friday open, 9:30. Throughout the video, I'm going to speed things up a little bit, okay? So if I pop this speed up here to 5, we can see that this is our 1-minute chart that we're looking at here, and this is the Renko chart. Right now we're at 5x speed, and I'm going to start slowing things down once I see a few things come into play. What we're looking for out of the gate is where the big orders initiating in the market, okay? So let's watch price play out here. Now, I'll pause this replay for a second. Whenever I pause this replay, it's going to flip back to my 1-minute chart. That's just where I started the replay on. So what we're going to look for is on these bars right here, these are delta footprints. What is a delta footprint? A delta footprint is measuring aggression on a certain tick value. So let's say right here, this tick value, which is 44.60.50, we have a green bar horizontally and it says 246. That means 246 more contracts were market purchased at the ask or the offer, showing aggression to the upside, okay? If you see green numbers, it doesn't mean price is going up. It just means at this tick value right now on this print, there is 246 more aggressive market orders hitting the offer. So 246 more aggressive buyers than sellers market buying the bid, okay? And vice versa. If we've got this negative 181 here sitting at this 4461, that means there is 181 more aggressive sellers hitting the bid than there are buyers. So the way this might look, or the way the calculation might look, is maybe in this case right here, there were 500 contracts hitting the offer at the market, so buying the offer, and there was 681 contracts buying the bid at market. You do the math here. 681 minus 500 equals negative 180. Why negative? Because there was 681 more contracts hitting the bid. Okay, so the difference is the bid, it represents that in red and a negative. So what we're going to do here is we're going to start this up, play, we'll go back to the Renko, and we'll watch this play out. I want you guys to watch for large orders coming to the market like this one that we're seeing right here, okay? This is our first sign at 44.63.25 that there could be some larger order injections into the market. Now, what is this right here? I'm going to pause the video quickly and we'll flip back to the chart. What is this? Is this a large aggressive market order that is buying the market, or are they selling the market? Okay? I'll give you a second to think about it. It's green. It's positive. They're buying the market. All right? We'll continue playing this here. And we'll keep watching price. Okay? So right now, what I've done mentally is I have this area in my mind. Right? I have this area in my mind that I want to just kind of keep an eye on. So what we can do, actually, we can drop this little horizontal tool here, and we'll just change the color to green. Okay? This is the first area we're looking at. We can see price comes back, and what does price do? It's respecting the area for now, okay? It's not enough for me to take a trade off of, but if there are scalpers out there, these are perfect type scalp trades, okay? We'll let this market continue playing out, and this is 5x speed, remember, okay? Let's just reference our other charts here for a sec. 1 minute chart is pushing up. we're going for this high right here, or sorry, 5-minute chart is pushing up, we're going for this high right here. 1-minute chart is on a pretty good tear as well. And we'll flip back into the Renkos. The purpose of this video is I want to show you guys what you guys can see on the order flow before you even get that PD array set up. Okay, fair value gap, order block, whatever you're trading off of the ICT SMC concepts. I'm not saying you can get an earlier entry. In some cases you can. But what I want to let you guys know is you almost know where you want to get in before the PD array sets up. Okay, here we go. We got another block here. 2,675 to the negative. These are sellers aggressively hitting the market at the bid. This is very important. Why? Point of control is also shifted up to this area. We're going to have to mark this. All right? Horizontal line. We'll drop that on there and we'll just make that red. Okay? On Friday, this was a very, very, very important level for me. 65, 44.65. And I knew this right at this moment. Okay? Right at this moment, this is when I knew this was going to be an important level for the day. Let's go look at the candlestick charts, as that's what most of you guys are watching. Look at all of these deltas here building up in the 65s. Okay? Delta and volume building up in the 65 here. We can see this is a very important area for the market. All right? If you were just looking at your candlestick charts, this would just look like chop. And you know what? It kind of is chop, right? But within that chop there is what? Some sort of balance, equilibrium, or a big fight going on. And with the order flow, we can see exactly where that fight's happening. It's happening at the 65 and the 63. So price will oscillate around here for a little bit. This video is going to be a little bit longer, but it's going to be worth it. I want to let this play out, and I want to show you guys what we can do with knowing that these are larger orders in the market and how we can possibly play off these, okay? Another larger order sitting in right here at 44.66s. Let's see if this stays large, okay? The only way this order would get smaller, smaller to the point where it's insignificant, is right now it's 18.37 or 38 to the buy side, right? Aggressive orders at the offer. Now, if that amount of contracts or more started hitting the bid aggressively, we could bring this number down to an insignificant value. Right now, it's significant. So what am I going to do? Tools, I'm going to drop a trend or a horizontal trend line on it, horizontal line, and we'll make it green. If this number peters out to something very low and it's not showing any significance anymore, we can get rid of it. But we can see these are the three areas that we're going to want to concentrate on today so far. And flip over to a candlestick chart and speed this up a little bit. So we're on 8x speed right now. We can see our 1-minute chart here. We're still chopping around. We're going for a bit of a dive. Let's reduce it to 6x. And I'm going to pause it there. Okay. So what is one thing that we see here intraday? And this is like ICT type model, right? Forget the bigger picture. You guys can go look at the bigger picture yourself. For me, I'm short-term long bias on the bigger picture. What do we get intraday here, right? Intraday we get a sweep of a low. This is not a market structure shift or large displacement, right? Why? Because we swept a low and price started pushing back above that low. We can't close below the low aggressively. So we don't consider this a shift in market structure to be able to short a PD array up here, right? Like if the market now pushed back up into these fair value gaps, can we short that? No, right? We don't have sweeps in the right direction. We haven't aggressively shifted the market the way we like. We're not going to short this thing. Even this print that's coming down right here, is this an aggressive market structure shift? No, right? We cannot short this thing. We're simply sweeping a low, or as ICT might say, we're taking an intraday liquidity draw here, right? Anyone who was long in this area, they'd have their stops under here, and all the bad shorts that are shorting lows are going to be trying to short this. This is just a draw, right? So let's continue playing this right here. What are we looking now based on an ICT model? So what do we have? We have a draw. What do we need after the draw? We get the draw on liquidity. We get a market structure shift. And then what? We look for a PD array to get into a trade, right? Let's hit play. We'll go back here and we'll have a look at our numbers still. We still have this 900 becomes less significant. Why? Because this 1647 and this 3000 here almost are much larger. We can remove this 900 for now. If you leave it there, there's no big deal. It's absolutely no big deal. But at this point, we know that we want to be looking at these two values right here, 65 and 66 for a potential trade. Now, what do we need out of this trade to get a trade? Or what do we need out of the chart to get a trade? Preferably, we want a large market structure shift through this area with displacement higher, correct? Go to the 5-minute chart here, same thing. We want a large market structure shift, large displacement, and aggressive buy side here. And this is what we're getting. So this break right here looks much stronger than the break of the low, correct? Okay, let's pause this for a second. We'll go to the 5-minute chart, and we can see we've got this large fair value gap forming. Candle 3 is not closed yet, so we cannot call it a fair value gap. What we'll do is we'll let this play out until candle 3 closes, all right? Just to keep this plain and simple. These lines that I have in here, this one up here, this 44.73.25 is a draw on a larger time frame. Okay, so it's right here, 60-minute, big draw up here. All right, here we go. Let's go to the 5-minute. Three-minute, we'll check all these charts out right here. 3-minute chart we'll look at. Okay, so what do we have? We've got displacement to the upside after we swept a low. And what do we have inside of this area? We've got a 3-minute fair value gap. Let me get this drawn in here so we can see it very clearly. We've got a 3-minute fair value gap, high to low. Here we go. What are very important values within this fair value gap? 65. Let's double check them here. 66 and 65. Okay, 66 and 65. Most of the time, and this is a smaller fair value gap, but you do have fair value gaps on ES that are 5 points, 6 points, 8 points, depending on the day, depending on the time frame. So most of the time, you're buying the front of this fair value gap. Instead of buying the front of the fair value gap, we already know that the large orders that are injecting activity into the market are sitting at 66 and 65. Now let's go to our candlestick chart here, even on the 1-minute, and we'll drop two lines, one at 66, here's the 65, and we'll just change this color. We'll just go black, and we'll change the line. We'll drop this one at 66, okay? And if we're looking at a 3-minute fair value gap, where could our stop be? Our stops could possibly be below here, which is super aggressive, or below the low, all right? We'll hit play. And we'll watch how this plays out. And if we go back to our footprint chart right here, one thing that we do notice is as we're getting down into these larger orders, price is failing to accept lower. It's not that the sellers are not able to put large amounts of pressure to the downside. Why? Because they're running into these larger orders, okay? And we get a rejection right off this 66 back to the upside. Okay? If we go to the 5-minute chart, now on the 5-minute chart, we've got a fair value gap right here. I wonder if we could do something about this fair value gap. I don't even remember, to be honest with you, if we're coming back here on the 5 minute to get filled, but we get one fill on the 3 minutes so far inside the fair value gap. And what do? We reach back for the high. Okay, let's speed this up a little bit. 65 is still a very important area in the market. I would not dismiss this. We did not come back to retest these 65s after we displaced higher and had a market structure shift. It is still a very relevant area in the marketplace. Okay, do not forget this price, 65. We've already had one trade off the 66s, straight back to the highs. Pull back, buy the 66s, highs, we're out. And what is this? 66 to 73. Take your 7 points and you're good to go. Okay, we'll go back to our chart. We're pushing through the highs again. Fantastic. This is our draw area. Okay. I'm going to speed this up about 10x. There's going to be another very important piece that happens up in this area, and I'll show you. This is the area. Let me pause it here. Now that we're above our draw on our 60 minute, right? What are we looking for? We're looking for market structure shift to the downside with displacement, correct? There's something in order flow that tells me that we are getting a market structure shift and potential displacement to the downside before it happens. And when that shows its face in the market, that tells me this could be my potential entry within a PD array if it lines up. Let's wait and see, okay? Don't forget our charts. 1 minute, we're above our draw, and we're just waiting for price to do what it wants to do. We'll go back here. Market's trying to push higher. Market is trying to push higher, and it can't. You see how inactive everything is up here? Buyers just gave up and said, nope. You see how strong the buyers were here, and they got to push through high of day? Buyers gave up and said no. What is the market anomaly that we see here? Give you 5 seconds. 4, 3, 2, 1. This is the anomaly. This is where the sellers came in and aggressively started hitting the market to the short side. Okay? Knowing this, we already know what our entry is going to be before we even get an ICT PD array. Guys, I'm not trashing ICT. I'm saying it is a fantastic tool to use along with order flow. And I'm showing you guys how you can use both of these in conjunction with each other to make yourself or give yourself lights out trading entries. We look at this chart right here. What do we have now? Market structure shift, large displacement after a draw. We don't have a fair value gap formed yet. We do not have a PD array formed yet. Yet, we already know what our entry is going to be. 44.74. That's going to be our entry. There's no questions about it. That's my entry within this 1 minute fair value gap. Okay? Within this 1 minute fair value gap right here, if this is how it closes, this 3-point gap, I can tell you to the tick where my entry is going to be. It's not the front, it's not the back. It is exactly where the order flow told me my entry should be. Just like this one right here, when we bought this and we were only offside or red by 1 tick before we got to target, it's the exact same thing on the flip side. Okay, let's play this. This video is going to be a little bit longer. Like I told you guys, we do not get to that 74 as quick as you guys are going to think. There is an entry too. This is his institutional entry drill model, I think, that happens here. A few ticks into the fair value gap, you get short, market goes down a little bit. Great, fantastic. I'm not saying ICT does not work. Again, I said if you couple your ICT SMC trading with order flow, you are going to notice a world of difference. Okay? This is playing on 12x speed right now. So what do we have here? Let's actually drop that line in here so we can see it very clearly. Right here, we'll make this red, all right? And we can go back to our candlestick charts. This is what most of you guys understand right now. Please, please, please do not forget about these two lines, these two black dashed lines. That was our 66. That was our 66 and our 65, which were the two large orders previously. I'm actually going to take one of these and move this up to our 74.50, which is where I told you we want to sell, right? We either want to buy the 65s or sell the 74.50s. We have large orders down here. We have large orders up here. And I'll keep flipping back and forth between this chart and our candlestick charts just so you guys can see there's not any other gnarly large orders that are happening in here after we get draws or we get pushed into areas that we're interested in. This is just price action that's ebb and flowing between two larger market participants, possibly the same participant, algos, whatever you want to call it, that are manipulating this market. We've identified them, okay? We've identified them and we can see them now, which is fantastic. I'll just let this keep playing out. I want you guys to see this play out. In my video yesterday, I actually reviewed my trade that I took short on this draw, market structure shift. I started, here we go. I'm talking too much and we're at the 65s already. Let's pause it. What do we get? We get a drive down into where? The 65s, right? What's the reaction off the 65? It's a pretty good reaction. Where did that 65 fall within? A fair value gap, correct? You see how we know our exact entry now? It's not a matter of guessing by the front of the fair value gap, by the back, by the consequent encroachment, by the midpoint, but you just, if there is a block of orders inside that fair value gap, and you know what? I'm going to go as far as saying even outside of the fair value gap by a point or a few ticks, you buy this. You buy wherever the order is sitting, especially if you get your ICT PD array that lines up with this, okay? Let's hit play again. And let's watch the reaction on the 1 minute chart off the 65. We bought at 65 and price came down to 64. We were 4 ticks offside on this whole trade. 4 ticks. That's it. Not 4 points, 4 ticks offside. And meanwhile, this whole time, I did not take this long here because I was looking for the short, but this whole time, if you're long the 65s, you better be getting out into the 74s. Because we know to get out into the 74s. Why? This guy. We had our draw, we had our market structure shift, we left a big lagging order there. We need to get out. And you'll see why we should be getting out once we get up there. I've got this on 12x speed. I'll speed it up just a little bit. We'll go 15x. And I'll tell you what, pause for 1 sec. Once we displaced here and had a market structure shift, I had an order in to short 74.50. 44.74.50. My order was in there. It's still in there. It's been in there. It was there for an hour or an hour and a bit before I got filled. But I was confident in the trade. I left the order there, and I let the market do what it had to do. Okay? Again, I'll flip back and forth between the two charts. I want you guys to get really familiar with this footprint chart as well. Okay? These deltas. This is a very important part of my trading, and I think it can help all of you guys out with your accuracy here. We pop up to 73, pull back a little bit. These moving averages I have on my chart are just to give me an idea of what, you know, mostly retail is doing. These 21s and 50s, traders like to use these as pullback buys and trends. I don't use them. I put them on my chart to make sure that I know what retail is doing. It's usually the wrong thing, but I like to just have them on my chart. And this orange line here is a VWAP. So here we go. We're driving up. Our 74.50 is this dash line up here, this black dash line. We'll flip back to our order flow chart, our footprint chart. See what the action is up here. We're a few ticks away. Got to be patient. Can't get in early. Just got to let the market do what it has to do. We know that the market wants to come back and retest this level. Here we are. Boom. We test it. We'll go back to our candlestick chart. We go offside a little bit on the trade, which is fine. Now, where should our targets be? Our first target should be back into this area where the previous buyers were, 65 area. This should be our first target. Our next target, we should try and see these 60 lows. We're sitting around, fluttering around. At this point, if we're in at 74.50, this is 75.50. Again, a trade. 4 ticks offside on the trade. If you can get more accurate than that on an entry, good for you. I'm not saying this is the end-all be-all. I'm just saying these two systems combined with each other can give you a very serious edge. And the problem with trading is order flow traders are fighting with ICT traders and saying, you're dumb, you're silly, and ICT saying no one else knows anything and everyone else is dumb and I know everything. Listen, let's grab the best of both worlds and make a lights-out trading setup for everyone. There's enough room in the market for all of us to make money. Okay, and with these setups, we can, and I want to show you guys what I'm doing every single day here, okay? We'll continue watching this move down. It's a slow grind, but it is what it is. We're on 50x speed. Let's just check what the 5-minute chart looks like. We popped up right in there, beautiful, 74.50, great. Check what our footprint chart looks like. Got rejected, failed acceptance above these highs. Price could just not move higher through the highs. It's great. Sellers came back in and drove very hard off the 74.50s. Fantastic. By the end of this trade, we get both of our targets on the short side. We also get our target on the long side because if you're long 65, you got to get out at 74. There's an order there. If you're long this early entry off 66, you get out into the highs. Okay, so those are 2 winning trades. Third winning trade right here. If you're short 74.50s, you're trying to get out into the 65s. All right, second target down into the 60s. We hit all these targets on this day. You can go back and just simply look at your chart. I've really got nothing more to explain on this. I think I've shown you guys everything here with the order flow in fine detail on the footprint chart. I haven't gone into huge detail on how to read this, but I did give you guys a high-level briefing on it. I want to see how many of you guys are interested in this. I want to take the time to make videos and address some of this here, because I think this is a very, very, very important tool that we can add to our arsenal, all of us, to turn our trading to the next level. If you guys like what you guys saw today, please like, comment, subscribe, leave a comment down below. I will get back to every single one of your comments. And again, remember our targets on this trade are 65, 61. If you guys want to go back and just look at your charts, see if we got targets, which we did before we hit our stop loss, which was sitting right above this area. Let me know if you guys are interested. We'll definitely have more of these videos coming soon. Have a great night. Cheers.